Good afternoon, everybody. Welcome back to my channel. Yes, it is me, Cordero Hudson, the Millennial Investor 1914. I'm working from home today. You see, I got my watch on, got my Phi Beta Sigma wristband. We are here to produce one last video for this week for me to engage my subscribers. And on Sunday, I'm out of here. Next thing you're going to be seeing women in bikinis, great fresh fruit, smoothies, me on the beach every day, me partying every day, taking naps, eating good, eating steak, spending money. So as of Sunday, I'm done. So, but today's video is 5 market beating stocks that I'm going to continue to buy forever in my dividend growth portfolio, and that I plan on just never selling. And I love it. Just so you guys know for a fact, these stocks, they do cost a lot. These stocks are not, except for one. And I like the stock. You probably like it as well. Probably to add to your dividend growth portfolio. It is a dividend aristocrat. But for the most part, as I think and as I'm looking, uh, this company is a dividend aristocrat, and I think borderline dividend king, maybe. But the other ones are dividend contenders. They're close to being the dividend aristocrat. And so to be classified a dividend aristocrat, is a company part of the S&P 500 that has increased their dividends for the past 25 years. So let's go into the 5 market beating companies that I would never sell. The companies are Microsoft, Aflac, Costco, American Express, Broadcom. First company right here is Microsoft. It needs no introduction. We're on the Microsoft uh, platform. And so if you're not familiar with Microsoft and the Magnificent Seven, Microsoft is my top holding in my dividend growth portfolio. Not only do I invest into VU and VTI and growth ETFs, but I also invest into Microsoft. I think and I know that for the long haul, Microsoft is going to grow their cloud business. Azure, they're going to continue to make money. They have Microsoft Suite, Microsoft 360, a lot of great things, and Microsoft creates tons of free cash flow. So as you see right now, uh, Microsoft is at $412.91. It's been going up and down, and just as a precursor, Jerome Powell was supposed to be speaking today and supposed to be speaking tomorrow. The CPI data is supposed to be coming out tomorrow, and if the CPI data it comes out as hot or whatnot, it's going to prove that again the Fed chair is not going to be reducing the rates and interest rates, and with that, the whole stock market is going to fall again. And this $412 may fall to again $400, 397, 395. Because last time around the time when we got the bad news, the whole stock market fell. That'll be a great time to hop in to start a position if you don't have a position in Microsoft, or if you want to add more to your Microsoft bag. It has a dividend yield of 0.73, which is not high, but the uniqueness about Microsoft is that it has a low payout ratio. They buy back their stock a lot. It has been increasing their dividend for the past 19 years. So it's 6 years away to finally becoming a dividend aristocrat. And it pays a juicy 0.75 cent per quarter dividend per each stock. So that's why I love it. The next stock, Costco. If you are familiar with Costco, being a member, if you have a family, I know you're familiar with Sam's Club and also Costco. Costco, once you pay the fee, either monthly or annually, for I love it that when people become members of Costco, because for me, as being an investor, I reap the benefits. I reap the benefits of when Costco increased its membership rates. I reap the benefits when people go and buy bulk at Costco, gas. I love it because by me being an investor, Costco increases its share price a lot and also pays a nice dividend. But since the stock grows so fast, it grows faster than what it normally pays. As you see right now, Costco is at $774.60. But just know that when you're buying these stocks, you don't have to have the whole $774 to buy the stock. You can buy partial shares in Charles Schwab, in the Robinhood apps. I use Fidelity, Vanguard. If you buy these stocks, it's not like how it was in 2012. Back then, when I had Ameritrade, you couldn't even buy partial shares. If you didn't have the whole money to buy the whole mutual fund or index fund, like the VFIAX. A lot of times, you had to, in the past, you had to have a full $3,000 to get into said ETF. Right now, you don't have to because of competition, and so you can buy partial shares of Costco. Costco has a 0.60 dividend yield, annual payout of 4.64 per stock, has a low payout ratio of 27.06%, has been growing its dividend at a clip of 12.33% per year, and it also has a dividend growth of 19%, 6 years into dividend aristocrat status. My next buy and hold stock that produces market beating returns: Microsoft, Costco, and now you see American Express. The commonality that you'll see it first off, as I go into that, the reason I have American Express on this list is because I have my business account through Millennial Investor 1914 through my YouTube channels. Have my LLC. I have also a American Express card. I don't have the platinum yet, but I have an American Express card. I utilize it a lot when I pay my bills, and it produces buku returns. I only have 5 shares right now. It's $240, and I plan on buying at least $100 to at least $150 per share per uh, month, as you see right here. Real quick. I'm buying right here, as you see. American Express is AXP, buying at least $100 to $125, trying to get into American Express, trying to get my position up to at least $3,000, and then my next goal is $5,000. Right here, what you see is a commonality is that the dividend yield is low, not as low as Costco and Microsoft, but the dividend yield is low, but it grows its dividend uh, by a lot. Last year, it grew by 17%. The year beforehand was like 17%. On average, it's close to 10%. But American Express is up there with MasterCard and Visa, and with the way it grows its dividend. I love it. It's compounding. My shares is growing. It's compounding, and I would never share. I would never sell my Microsoft stocks, my Costco, my American Express. I'm gonna keep these for 20, 25, 30 years compounding. My next stock that beats market returns is Aflac. Super smooth supplemental insurance. I know a lot of people are familiar with Aflac. If you have a business, I'm in HR, and when we do open enrollment, we do business at Aflac. In my past jobs, Aflac has always been producing like the extra insurance in regards to accidental insurance, all type of insurance that you can get aside. And what happens is that they take that money, they invest it, and it's called a float. They invest that money, and then when it comes time to pay it out, then they use the money that they invested in the float to pay out to individuals when they do claims. Otherwise, if a person is not doing a claim, they are basically floating the money, which is great for us because if they've been increasing their dividend by wazoo. Not gonna lie, it says it's been growing its dividend about 10%. I just now recently bought Aflac last year, but I've been invested for the past 5 to 7 years, and I kid you not, I've seen some wild, crazy pay increases from Aflac. For the past 7 years of me investing, I've seen Aflac grow its dividend by 15%, at least three to four times. That's crazy. That's crazy for a stock to be under $100 to have a yield over 2% to be, and then a low payout ratio, and also increase it by roughly 10 to 15%. That's unheard of. That means if you used to buy the stock and you used to hold it and buy on an annualized basis, on a monthly basis, a lot of people get rich off of Aflac, and then a lot of people do also cover calls and will strategy because it's really easy to get 100 shares of Aflac. It's actually really crazy. Last stock. The last stock is Broadcom. Now, just to keep in mind, Broadcom is a beast. And I will understand that out of all 5 companies that I've named today, that's market beating, that beat the market, I would say out of all of them, Broadcom beats Microsoft, Costco, American Express, and Aflac. Chew it up, spit it out, eat it off the bone. Broadcom is a tech company. It's a hardware company / software. They do a lot of share buybacks. They do a lot of company mergers. They basically they deal with 5G and connectivity and everything. They are right here. It's a global technology leader that designs, develops, and supplies a broad range of semiconductor, enterprise software, and security solutions. They're into security solutions right here. They're into hybrid cloud infrastructure. They're into 5G. They're a semiconductor company. They deal with so much. And by with them being so much, you would know and understand that the stock price is definitely not cheap. It's definitely not cheap. This is one of the stocks, right? Honestly, that I tried to buy $100, $150, $200 at a time per month, and I've got extra money. I typically buy one share, but to buy just one share, you coming out 1,300. A lot of times, it's like, do you want to spend 1,300 just all on Broadcom, or do you want to split it between Google, Pepsi, maybe some in Aflac, maybe some in OKE, maybe some in JP Morgan Chase, or do you want to just put the whole 1,300 in Broadcom? It's your choice. But the reason why I have this is that it pays an annual payout of $21. Each quarter, it pays $5.25 per share of Broadcom. It has a dividend growth of 17.49 for the 5 year, but sometimes it grows more. It has a dividend growth of 13 years, so it still has some ways to grow their dividend to be a dividend aristocrat status. What's lovely is that it's above 1%, and so with the compounding, if you keep this stock and you let it compound for at least 20 to 25 years, you will make a lot of money. Not only from the dividend increase, but this bad boy is very volatile. The beta is super high. And I kid you not, when I look at my dividend portfolios on a day-to-day, weekly basis, it sometimes will go up $200 and then it go down a lot. And so a lot of times if I see if my portfolio is going to increase or decrease, I look at Microsoft, I look at Broadcom, because those are my 2 highest. I have 10,000, 11,000 in Microsoft. I have about 8,000, 9,000 in Broadcom. So my portfolio is super volatile with the beta above 1. 1 is the market. And so I know that if Microsoft and Broadcom is doing well, my portfolio is booming. My portfolio is at 56,000 right now. But if it's a bad day in the market, and since I'm heavily tilt in technology, heavy tilt in Microsoft and Broadcom, my portfolio is going to go down a lot. And so I just have to log off and be like, you know what? I'm not even looking at my portfolio. But this portfolio, this stock right here, this IT informational technology semiconductor stock is just outside of the Magnificent Seven and outside of, like Apple and Microsoft and Nvidia. Broadcom is up there where it holds its own. You see right here, it's up 1.31% right now, up $17. One share is up $17. Imagine, because I have 6 shares, 6.5 or 6 point something like that. Imagine you own 10 shares of this bad boy. 10 shares is roughly what? What is that? 13,000? Yeah, that's 13,000. If I'm doing the math right. Yeah. Yeah. Yeah, correct me if I'm wrong, but you making buku money, and so like with my portfolio right here, real quick, as in the video, I have these stocks in my portfolio. I hold Aflac and just go off of market value. Microsoft, Broadcom. See right here, over I'm up over 91% in Broadcom. I'm up over 19% in Microsoft. And then you have my other stocks, Aflac. It's really my income. It's an income play, not really a dividend growth or a growth play. It's an income play, and that's why I put it for you guys. 'Cause I know that out of all five stocks, my Aflac is affordable for a person to buy at $86. Just saying. And then my American Express is right here, and I plan on. I have 4.5 shares. I want to get it up, and I'm going to be paying a lot bit more. And then as another stock that's for you guys to look into is Pepsi. Pepsi, it's not market beating, but it's all reliable. It's a dividend king, and I love it. I love it. It creates and puts a lot of stability in my portfolio, and then in VOO's SP 500, it's top 500 stability. And so as you see, I have some stocks that I'm relying on that's going to in the future. It's going to be like home runs that I'm investing into heavily, so they can be home runs in 25 years. And then I have stocks in the short term and in the medium term, like J.P. Morgan Chase and Region Financial and Aflac, that's going to and Chevron, that's going to produce me income right now. So if you like my video of the 5 market beating stocks that I would not sell, hope you guys enjoy my video and hope you have a good week. See you in Brazil.